Cool. So what we're going to do today is we're going to split this call into two main sections. So the first half, we're going to do our day 13 of our Master a Coin Bootcamp, going through, how we do top downs correctly, because a lot of people I've noticed, they have the concepts, they know what a reaccumulation is, they know how to fib, but they're not putting all of the pieces together, and that's why they're not profitable because they know what a schematic is. They might know how to validate an entry, but because they're doing them in the wrong orders and not doing it in the right way, right? That's why they're not profitable. It's like, you can fuck your girl, but why will your girl go and fuck someone else? Because they do it better, right? So let's make sure, right, we all do it better, we all do it in the right way, and we're not having no issues. After we go through that training, obviously I'll open the floor up for a Q&A. So if you have questions, you're more than welcome to ping them in the chat now. And what I'll do is I'll just go through them one by one, obviously after. And then we're going to go through an actual market outlook where we're going to look at the live markets, go through economics, kind of get up to date with absolutely everything that's going on and see if there's any trades we can catch today or later on this week. So with no further ado, let's kind of get into the team training side of things. So obviously we mentioned doing top-down analysis. Now, the when it comes to doing your markups, right? Always start on these higher time frames first. And what we're going to do is obviously we should always be doing futures, but just for the sake of today, I'm just going to do it on a CFD just because I don't want to delete all my futures markups on my chart. So a lot of you, where you're going wrong is you're hearing some of these spastics online say, all you need is one time frame. Wrong. You need absolutely every time frame because every time frame has its own independent market structure and market cycle. Like, imagine this, right? Imagine you're going to the market and you're like, for example, let's just say you're here, right? You might be like, oh my God, or let's pretend this hasn't happened yet, right? You might be like, oh my God, we're in supply to the left. Oh my God, we have a distribution. Oh my God, we have a breaker structure, fair value gap, order cock, or whatever shit you use, right? And you might start selling because we're bearish on this time frame. It might even come up, where's my pen? It might even come up here and give a little micro and you might start shorting. But if you're not realizing what the higher time frame's doing, and you're not realizing that, wait a minute, yes, this is supply, but we should not be selling out of here because of where we are, and the higher time frame is actually coming into demand versus even here, right? Seeing this fake break to the upside. You might be like, oh my God, it's an accumulation. Oh my God, let's buy it. Without doing the correct top-down analysis, you're not realizing that we're not even in a POI, we're not in the right area, and you should not be buying from this area because it's not in the right zone. So what we're trying to build here is context. And what we're trying to do here, by doing it in the way I'm going to show you, you're going to build more consistency behind you, right? The reason why a lot of you will make money for a week and then give it back the week after, or you'll pass a funded account, get a payout, but then spend all your money on challenges again, is because you do not have a consistent approach towards the market. You're taking a trade based on what you see, how you feel, and everything is changing day in and day out. The way I analyze every time frame is the exact same. There is a methodical and scientific process. That means I trade consistently, and that's why I get consistent results. I've been doing this full time now, coming up 7, 8 years. So if you want to get to the same position, make sure you apply this and you analyze and break down the charts in the exact same way. Please don't try and do it randomly. Please don't try and do it in your own way because it won't work. So what we have to do is firstly, right, go all the way up to our higher time frames, right? Start on those weeklies, start on those monthlies. Now, on some charts, you like, for example, like this, it might not show you other data. So don't be afraid to cross-reference, for example, like on, let's say if you're looking at Euro USD or the Euro futures, for example, right? If we're looking at Euro futures, oh, wrong chart, right? Where a lot of people they'll make mistakes is, for example, like let's say they're looking at Euro futures, and where they'll make mistakes is they'll be like, oh, here, right? Oh, this is a redistribution. I want to sell out of here. Why is this incorrect? Because you haven't done a full top down. So you're going to try and sell here whilst we're going to buy into that. Why are we going to buy into it? Well, higher time frame. And this is why having a methodical process and also cross-referencing your charts, because some charts miss data. So like if I look, for example, at a different data source, right, for higher time frames, such as maybe the DXY, right? Because Euro USD, obviously in day three, we spoke about all the correlations. So if you look at those correlating lists, go on the markets that correlate. So for example, the dollar. And when we look at the dollar, we realize actually dollar is in a giant redistribution on the weekly time frame, and it's now mitigating to go lower. So actually, all this price action from 2017 isn't a reaccumulation, it's actually an active distribution. We're waiting for that. So now, when we go back on, for example, euro, right? Let's say we go on the euro futures chart again, right? Again, you might be looking, oh, this is a redistro trying to sell. But when you zoom out, okay, this chart doesn't have the data. So you can cross-reference, maybe we look on like FXCM, right? We can see, oh, wait a minute. Oh my goodness, we are in a demand zone. So can you see now where you have to cross-reference? Now, this isn't enough. You also have to do it in the right way, but also cross-reference isn't important because a lot of people make this mistake where they're trying to looking for sells in here because they think it's a redistro or a breaker structure. But in reality, because we are sitting in a giant demand zone on the higher time frame, we're now looking at this as accumulation to eventually potentially do that if the economics, of course, they align. Now, obviously, you should have done economic analysis, but today isn't an economic training, so we're not going to go through that maybe in the outlook side. But let's say now I'm doing this analysis, right? And I can see that, and obviously when I'm doing my analysis, I apply the same thing on every single chart, right? I do my box, so I mark up my market cycle, right? Who's in control? Am I seeing accumulations, reaccumulations, or am I seeing distributions and redistributions? So when I go to this chart, the first thing I'm going to do is I'm going to put a box over my schematic, all right? And box out all my phases and events. Then I'm going to put my line in the sand in, right? Because we know this is where obviously buyers are in control from. And then obviously we put in our fibs, 50. I'm going to draw it in a second, right? Put in our fibs, get the box, label it up. Obviously, how do we validate a reaccumulation? We look for our distro. Obviously, if you want to refer back to, I think it was day 5 or 6, we went over the reaccum validations. But we have our distro, our shakeout, and our breakout. We know it's valid. We know we've got our line in the sand, and obviously this is our invalidation point, right? And then we obviously put in our fibs. Now, you're not done. You don't just jump to another time frame. You have to complete your narrative on this time frame. And again, this is where a lot of you lot are going wrong is because you're not completing your narratives on the time frames. So what do I mean by complete my narrative? I have to treat this like it's a 1 minute. I know it's a daily, a weekly, and it's going to take years to happen, but I have to pretend it's the 1 minute and do the same thing on every single time frame. Remember, consistent results come from a consistent approach. You put in and you analyze each time frame the same way, you'll get the same results, correct results again and again. So what I have to do is draw my if-then scenarios that get me into a trade. Remember, I'm not predicting, I'm creating those if-then scenarios. So if this was a 1 minute, and I'm just going to hide all of this stuff quickly on the weekly. All right. What I need to see take me into a trade? It would either, and again, I always kind of try to start like up here. If this was my scenario, either one, she comes in here and accumulates, or two, reaccumulates. And that's all I need to see to get into a trade. I don't trade anything else. And I create if then scenarios. I don't predict. I create these scenarios. So if price comes down and accumulates, then I can get in. Or if it reaccumulates. So all I do is I trap price, set an alert here, set an alert here, and wait. Time goes past, she comes into my area. So I'm waiting for this accumulation. So now, because I've created the scenario on my higher time frame, when I go to this lower time frame and drop down, all right, I'm just gonna again clear a lot of this again. I'm not just randomly trying to mark up what I see. I've got an agenda, I've got a narrative, a story from the higher time frame. I already got a plan. And again, that's where you're going wrong because you're trading what you see and you're not trading your plan, right? So now this is an accumulation. So what was our if then scenario? Well, if this was a 1 minute time frame, what would you need to see? Well, obviously you got to validate it, right? So we come in, we got to change a character, we got our one drive, got our two drive, got our three drives, right? Got our fourth drive, got our manipulation. So now obviously we need our break. But yes, Kieran, this is going to take years. Yes, I don't care. You treat the market's fractal. You treat it the same way every single time. So if this was my 1 minute time frame, I'd obviously put my trading range in. All right, put my trading range in, validate my schematic. What do I need to see next? I need to see, for example, my break. And that's my scenario. So now, if I've done my economic analysis, right, and I've got a reason for buys to be in control. So if we're looking at Euro USD, what do we know? Euro USD is driven by who? The dollar, the DXY. So when it comes to the economics for the dollar, what's going on currently? Well, we know economically the dollar at this point in time is bearish, meaning that Euro USD is bullish on an economic basis. Okay, I'm not going to go through all this now because this is we'll do that on the outlook. But because we know economically it's bullish, and we create the narrative that we're in an active accumulation and want to do that, you have two choices. One, you can wait for this scenario to play out, and if you're comfortable waiting a year, wait a year. I'm not. I'm a day trader. So I'm going to want to get in something a bit more frequently. So what I would want to see is based on economics, so I have a reason for price to go up. If I can see on a lower time frame now evidence that supports that bullish narrative, accums, reaccumes, I can play this up to the sign of strength. I can buy it up to there if my economics are obviously in alignment. So I'm just going to use a different chart. So again, I don't want to get rid of all those markups. All right. So let's say now we put in our trading range. All right. We know this is obviously our accumulation. All right. And of course, we put in that scenario. That's what we want to see. So we can put in our line that we want to see break for our sign of strength. So now when I go to a lower time frame, I'm not doing anything different, right? All I'm doing is doing my boxes, my lines in the sands, and my fibs in the same way. So we go again, we can see the market cycle, we can see we had a type 4 accumulation, right? We can then see we went into a reaccumulation. And you do this till you find your most recent schematic that's relevant to price. So I got my reaccum. Can I validate it? Yep. Distro, shake, and break. Cool. Right, obviously you can refer back to day 6 if you want more in depth on this. Right, we put in our line in the sand. Right, and it should be very boring. It should be methodical. Like when you're analyzing, it shouldn't be exciting. It should be the same thing on every time. Like you go look at all of my trades over the last almost decade now. It's all the same thing. It's all the same thing again and again and again and again and again and again. Again, the reason why you're not consistent is because none of your trades are the same. So, right, line in the sand, fibs, and now where's my leg? Well, this is my leg that I'm in. So what's my if then scenario that gets me into a trade? Well, one, she either comes down here and accumulates, or shakes out, breaks out, and creates a reaccum. They're the only two scenarios at this point in time that you should be using to get in trades. Unless you're advanced and we're playing the spring models or the rebalancing models. But for now, keep it really, really simple until you get good with this. Once you get good with this, then you can add on all the shiny bells and whistles. So we create, and now this is the thing, right? You have to draw it because if you try to remember it, you're going to forget. So I physically draw it. I draw it. Okay, I want to see my accumulations, right? Or I want to see my reaccumulation, right? Shake out all this liquidity and create a reaccum. So now I can stop here if I want. But again, what type of trader are you? For me, I want a day trade, so I'm not going to stop on the 8 hour time frame because this low is from January to where we are today. Again, I don't fancy waiting years for a trade. So I'll scale down to a lower time frame. And now when I'm scaling down to the next time frame, here's the key. Pay attention to this part, right? When I scale down to a lower time frame, here's what I'm trying to see. Is this so each time frame has its own structure. Remember that. So I'm on the 8 hour and it's bullish from here. But when I go to a lower time frame, perhaps the 1 hour or the 15 minute, inside of this single bullish leg, I will see a lower time frame market cycle again. And what I'm trying to see is has the lower time frame market broke any structure yet? If it has broken structure, if the lower time frame breaks structure, that is confirming the higher time frame narrative of the pullback is going to play out. If it isn't, If the lower time frame is still bullish, I can keep buying it up until it says no. And then eventually, once I get the break, that's when the higher time frame pullback will occur. So when I now drop down to, let's say, the 4 hour or 1 hour, inside of this leg, I can see it reaccumulate here. I can see it again. I can keep seeing it reaccumulate. Now, you don't have to put all the boxes in because sometimes they're not relevant, right? So I always like to keep it focused on my most recent schematic that's relevant to my analysis. So here is my most recent reaccumulation. Again, can I validate it? Distro, shake, break, right? I put in my line in the sand. And can you guess what we're going to do next? The same thing. Again and again and again and again and again. Line in the sand, fibs, and I create my if-then scenario. What's my if-then scenario? The same thing. She either comes down, accumulates, or creates the reaccumulation. In this case, what has she actually done? Well, she's come into demand. So now she's in my demand zone. I can go to a lower time frame and do the same thing on my legs or try to apply my lower time frame criteria. So in this case, right, because I'm in my POI, I can apply my lower time frame criteria. So let's say, for example, I look at this, I can see, okay, well, I get my initial change of character, one drive, two drive, right, going into a third drive, potential manipulation. What do I need to see? A break, right? So I create the scenarios, all right? Cool. Now, what I that and by the way, this is the high that needs to obviously break, right? Because this is now my larger accumulation. Now, you can stop here, right? If you want to wait for this to play out. And that is the safest scenario. Now, all depends on economics if you can be aggressive to play this up now. Now, based on today's economics, right, we're still in the midst of a government shutdown. I know there's a potential that they're reopening this week, but for me, without a with the government closed, I have no business trying to trade currencies right now. I'll trade indices because I got data, I got earnings reports coming out left, right, and center, but I've got no business during this government shutdown to trade a currency. I have zero desire to, right? Because I have zero data for currencies to base economics on. So, do I have a reason today for economic bias to step in this market? No, not until the government shutdown. So, what I will now do is wait for set an alert on this high, set an alert on there, and wait for that to play out. Because my if then scenario is she confirms that, comes back, gives another accum, and then goes. Does that make sense? It's the same sort of process every time. It's applying the box, right? So if we go back to the theory, right, you find your market cycles, you find your most recent schematic, you put the box on it, you do the line in the sand, you put your 50, your 80 off your fib, and you either wait for price to accumulate or reaccumulate. You've created that scenario. And then when you dive down to a lower time frame, all you're trying to investigate is, well, where is it right now? Is it in my demand zone? If it is, well, I look for my validation, right? If it's still trending to the upside, well, is the lower time frame still bullish? If the lower time frame's still bullish and got a reaccumulation, well, I can keep buying out of that until it says no. And now if that lower time frame starts distributing and breaks, well, that's now just given permission for the higher time frame to come back down to demand. And obviously we can play the entry model in there. Does that make sense? So you're applying it in the same way. We'll do another one, but you apply it in the same way every single time, right? So if we're looking at, let's say, S&P 500, right? We go on like the higher time frames, right? We identify our schematics. So just for the sake of time, I'm not going to go to it through the weekly on this because it's pretty much the same. So I go on here, right? And again, I'm looking at my schematics that have real estate on the chart. Like some of y'all are coming in and like, that's a reaccumulation. No, it's not. Why is this not a reaccumulation? Because I can't validate it. Remember, schematics, right? You need to be able to see the details because like, just like for example, the actual schematic, let me put them up. Like just like for example, when we look at our actual reaccumulation models, right? When we actually look at these, can you see how on this drawing you can physically see all these little parts? You can label all the little areas, right? You can see highs and lows building out each phase and event. You can split it phase A, phase B, phase C, right? You can do that. But when I look at, for example, that, can I label the BC the AR? No, it's very hard to do that. But now if I look at, for example, this one, the bigger one, I can clearly see my distro, my shakeout, and then my breakout. Right? I can clearly see, right? Phase A, where we stop the trends. Phase B, where time passes, opinions form. Phase C, where the market is manipulating, and then phase D, where I'm getting the sign of strength. Right? So I can come in, put my box, right? Put my line in the sand, put my fib, and again, treat it like a 1 minute. Right? Some of y'all, where you're too big for these little things, you're too little for the big things. You won't go through an extra 30 seconds to mark up this narrative on this time frame, and that's why you're getting destroyed on the lower time frames. Right? Take the time. The market's not going anywhere. Put your scenarios, your accumulation or your reaccumulation. Now, the thought process. This is my leg. If that's going to occur, the lower time frame must break first. So when I go down to a lower time frame, has the lower time frame broken or not? Well, we can see no, it hasn't. The lower time frame is still bullish because it's being maintained from this box, this reaccumulation. So I do the same thing, right? Box, validate the box, distro, shake, break, right? Line in the sand, fib, right? And I create my F10 scenarios. One, she comes here, accumulates, or two, reaccumulates. There's nothing else to do outside of that. Okay, unless we go through the advanced concepts, but again, we'll do it another day. So for now, what has she done? She's come into demand. So what was our F10 scenarios? If we already planned it out. If she comes into demand and accumulates, we buy it. So okay, let's investigate. We go down to a lower time frame. What can we see? Okay, starting left to right, we had a redistribution over here. Excuse me, have a burp over there. Price then came in, it accumulated. What did it then do? It then boofed. So we're now, right, bullish on here, putting our fibs. We can fib our manipulation. So now what are my scenarios? Can you guess? It's the same thing. She comes into here, she accumulates, or she shakes out and reaccumulates. And that's it. So when we're going to go into the market outlook, this is what I'm about to do. And this is the trade I'm going to be looking for today on S&P 500, right? Either a reaccumulation or price come into here. And it's the same thing I do every single day. This is it. I mean, the only other thing there is the advanced entry models, but you don't need that to be profitable, right? This is enough to become profitable if you can apply the entry by criteria on top of that, where she comes in, gives you the change of character, the drives, all the lower time frame stuff we covered in day 7. So one like mapping out these higher time frames is super important, and I can't stress it enough. Once you've mapped this out, this is now how you can get better. Because what you can now do is you can back test and do your end of day markups. So obviously I don't trade Mondays, but we can now go back and think, cool, I've got my thesis, I know what's going on. What happened on Friday? What happened on Thursday? What happened on Wednesday? What happened on Tuesday? And you can go back, right, and do an end of day markup. And obviously, everyone here should be doing blue box scalps, unless, of course, we spoke again. What is a blue box? If you don't know, you should know by now because we're in day 13, right? But obviously, the New York Stock Exchange, right? So you can now go back and back test specifically what happened in those blue boxes. And because you've done the higher time frame narrative, that's how you can get your back test. And you can go back and, well, what happened on, I mean, well, let's say you might not have shorted there, but let's say, for example, in this bullish leg, you can go and back test these blue boxes and see if it gave any entries where you had, a schematic mitigate and it gave a lower time frame confirmation. And that's all you're looking for. All you need to do is basically do the top down like I showed you, and then wait for a schematic to mitigate. If you're in the blue box and you're in seek and destroy, you can have a blind limit on that to go. Or if you come into a POI, or if you haven't come into a POI, you just find the reaccum, play a micro in there with a one drive, two drive, three drive spring break, and you can get in off that in the blue box. And like if you do it this way, you're literally going to find trades every single week, pretty much. Now, it doesn't mean every day you can trade. Not every day you should trade, right? Mondays, I don't open the charts. Tuesdays, I'm open to trade. Wednesdays, I'm open to trade. Thursdays, I'm open to trade. Fridays, depends on the week. But what now, for example, makes me say, do I want to trade today is based on how many other scenarios they are to play out. What do I mean? So, for example, right, where I am today, like, am I going to try and trade today? Yes. Why? Because there's not that many scenarios that are going to play out and my narrative's still valid. Like, for example, we've come into demand, we've rebalanced. Now we know we're seeking and destroying for this high up here. So we go on a lower time frame, and all we have to do now is play a bullish market cycle up to this high. So now, because we know we're in seek and destroy and we're traveling to that high, all we literally do in the blue box this week is either one, wait for a fat sell off and an accumulation, or two, if it doesn't want to do that and just reaccumulates, keep buying the reaccumulations to hit all time highs again. And that's it. But again, it's the higher time frame that's super important. So if you don't do the analysis in that methodical way, where you do your box, do your line in the sand, do your leg, and then say, cool, oops, I know this is gonna okay, because you don't predict, but you say what I would do to take a trade, which would be either come into here and accumulate or reaccumulate. And then you go to a lower time frame to see is the lower time frame still bullish? If it is, you buy off that as a POI, and obviously if that lower time frame breaks, you're not going to sweat because you already got the higher time frame backup zones that you can play off. And so for example, we go down to the 4 hour, right? Okay, go down to the 1 hour. Where's our leg? Well, this is our most recent leg, right? So if when we're sitting here last week, right? Well, what did I tell you guys if you remember at this end of October? I said, hey guys, like on our Zooms on Thursday, I said, look, this isn't a week we're going to try and trade. If anything, we're going to try and play counter trend models down, you know? So it's the context where we are because now we apply the seek and destroy and the rebalancing. So when, for example, we've up here and we've sought and destroyed, well, okay, if lower time frame boosts, distros, redistros, we know we're playing the rebalancing model to the downside. So based on where we are, I'm not trying to buy up here now, you know? But for example, when we came down to here, oh, you best believe now I've come into demand. I'm now seeking and destroying for a new high. I am going to try and trade this week because I have opportunities. And I can build economic narrative because of all the earnings reports. Does that make a bit more sense now? So you're not just going to here's what you don't do. La di da di da. Oh, I want to scalp 5 minute. Oh my God. Here's a distribution. Oh my God, I short. No, you spastic, right? You zoom out, go to the higher time frame, right? And you do it in the way that professional traders do it. You apply the same thing over and over again because now, because remember this, right? The market is a game of chess. There is literally only four moves that can ever, ever, ever occur. Trading ain't hard. What's hard is you disciplining yourself to remind yourself of the concepts and the things again and again and again. And the hard thing is you practicing it and then getting that courage to make a mistake and get feedback from someone who's doing it correctly. That's the hard part. And the hard part is doing the same thing again and again and not seeing results. Because what we tend to do is do it, not see results, give up, jump to another strategy, find a new mentor, find a new course, and you're stuck in the same cycle again and again and again. The strategy doesn't matter. I don't care if you trade fucking, I don't care what you trade. What is important now is you have the consistent approach. You have the same model day in and day out. You treat it like a business, not like a hobby. Hobbies you do when you're ready, when you feel like it. You do it when you want. There's no structure. It's fun. It's la di da di da, right? Versus a business, right? You know Sainsbury's or Walmart is open at this time from this time. You know what they sell in each aisle. It is the same thing. That's why businesses make money. Hobbies cost money because it's all up in the air. So what you need to do is you need to have a I can't remember what the acronym's called here. I was going to try and sound really smart, but you basically just got to write down a plan in the order in which you do shit. Does that make sense? So you need to have a proper business plan written out. What markets are you trading? How are you doing your economics? And it should all be the same across all markets. What hours you analyze? What hours are you? Oh, that's it. SOP, standard operating procedure. Shout out you, Ria. Your SOP, your standard operate, or yeah, right, standard operate. Oh, too many letters. Right? But having that procedure, the same thing every single time. It's like, for example, let's say a criminal, right, in the court of law. They don't just, oh, I feel like he's evil because he's got a face tattoo. Nah, can I build evidence? There's a procedure. I'm not a criminal, so I ain't got a clue what the procedure is. But you get it, right? They have an order in which they do shit. So, I was watching a bit of Suits, so that's why the idea came, right? But they have the order, right? They got to do the interview, they have the order. You know, it's the same thing with your trades. You've got to have that structure and you've got to have the order. So start off structuring your life. When will you analyze? When will you trade? We know blue box. We only trade after 2:30 p.m. UK time up until 8 to 9 p.m. UK time. They're the only times we trade. Right? All the other times, sure, you can be practicing, right? But when you now do that top-down analysis, same markups, creating that sort of, okay, here's my leg, here's my if-then scenarios. Okay, right? Now I've got my scenarios. Okay, I know what I'm looking for. So now today, like if for example at the open in 2 hours, if we see this brolic motherfucking candle print like that, I'm not gonna start selling because I did a top down. I built a narrative. And now here's the thing. Here's the kicker. These if then scenarios can fail, and that's okay because you're not entering a trade. You're creating a scenario, you're waiting for the stars to align, and only when they align, you pull the trigger. That's it. You're not trying to predict. You're not trying to be smart. You're creating a scenario. That's all you can control, remember? You can't control what price does. You can control yourself, your entry and exit. So that's all your job is to do is create those if then scenarios. If price does this, then I do that. And if it doesn't, guess what? Who cares? Like for example, I haven't traded well, I haven't traded forex indices in the last 2 weeks. But all I'm doing is creating scenarios. Like if you guys remember on, was it Thursday we were looking for the short on Nasdaq. I can't remember. When was it? Wednesday, my fault. So like for example, when we were sitting on our Zoom, right, we did our top down analysis on I think it was Tuesday. I can't remember what day it was now. But we said, all right, cool. Yes, we want to buy from these 50 and 80s, but we can now play the counter trend model because we've seen the counter trend model present. So we've seen the booth, we saw the distro, the redistro, and we've got room to come lower. So we said if price, right, and we're going to risk half because it's counter trend. If price comes into supply, then distributes, then I will short. Would I have got upset if it did that? No, because I don't care about being right or wrong. I care about making money. There's no correlation with being right and making money. That's what y'all don't understand. You're too caught up in this mindset throughout your whole life where school and the work system has literally programmed your mind to think you have to be right to be successful. No, you don't. Every single successful person on the planet loses and fails. In fact, the reason why I have probably succeeded more than you is because I have failed more times than you've tried. And that's the difference. So like I have listen, all every week I create an if then scenario and it doesn't play out. Every week. I don't care because that's okay, right? What is not okay is if my if then scenario plays out and I lose again and 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 again. Okay, there's an issue. All right, one loss is cool. I'll take a loss. Two losses, cool. But if it's now out of 50 trades, 40, 50 losses, all right, cool, you're doing something wrong. That's where now obviously you've got to make sure that the way you've applied it has been validated. So what I'd recommend you guys starting to do now before we get into the outlook side of things, right, is do these top downs on your equity markets. Like if you want a day trade, stop fucking trading all these markets. You should only be trading loads of markets if you're swing trading, right? So don't make it difficult. Stop trying to trade gold because some spastic on YouTube told you to, right? Half of these people you see online who post profits, it's not even real. We're not even getting into that conversation, right? Oh my God, one day I'll teach you guys how to know if the profits are fake or not. But it's very easy to tell. But the point is this, right? Stay in your lane. Unfollow traders on social media. Like, don't, because what will happen is you'll see some other trader on social media, right, post a fucking a TP today, and you're going to be like, oh, I want to get a trade. Or you'll lose a trade, and then some spastic is going to say, oh my God, there was liquidity above your zone. There's always a reason why you can lose. There's always a reason why you can win. Always. You can literally find the most random entry that will lose 100 times in a row but wins once, and someone will have a thesis on why it'll work. What matters is that you have a system that's valid, which we know this one works, right? How many traders have we created that are profitable and got payouts? It's too many at this point. So we know it works. Now, what you have to do is make sure that your approach with the system is the same day in and day out. And that's it, only one more thing. And the way you've done it has been validated by someone who's got the results you want. And at that point, all you have to do is literally give yourself enough time and go through a few sample sizes. Because once you've got that, you'll go and do a sample size of 20 trades. That's where the real learning begins. Y'all think this is learning? Yo, you haven't even scratched your big toe yet. The real learning occurs once you've validated everything by doing your markup, sending it to someone, showing someone, explaining your thought process that's actually profitable, and saying, hey, am I doing it right? Yes, you're doing it right. Cool. Now you can get onto your trades, which is you do your 20 trades, right? And basically, so you take 20 trades based on that criteria and then you look at the data. So for example, he might lose, let's just start off with a shit win rate, but let's just say you lose 15 trades, win 5 trades. Cool. What's my efficiency rate? That's the first thing you're looking for, right? What is that? That means how many trades did you take that followed your rules? And that's where, again, having your mentor come in to review it for you. Because if you're meant, like, for example, I always use this example, but for example, you guys know Harry, like Harry's first sample size was like 20 trades. 19 of them lost, I think one hit TP. And he's sitting there like, bro, I can backtest. All my markups are valid. Why the fuck am I losing 19 trades in a row? Is my system broke? Like, is my trading plan broke? Do the markets hate me? Like, what's going on here? And turns out his efficiency rate was sitting at like 10%. What is your efficiency rate? How well do you follow your rules? So it turns out but less than one or two of those trades that he took actually met his plan. But why could he backtest correctly, but the live market couldn't take trades that met his plan? Exactly what you say, psychology, his mindset. He didn't work on his emotions. They were causing him to perceive trades that weren't valid because he wanted to trade. He wanted to be successful. Now, we'll go through whole days on psychology, later on in the boot camp. But for now, right? Just focus on that efficiency rate and aim for 90%. And by the way, you can't say if the trade's valid or not. You need a third party to, because we are all biased to our own opinions and trade ideas. So once you've got the third party to tell you if it's valid or not, now you can calculate the efficiency rate. But for now, let's just move that to the side. Let's say you've got 5 winners and 15 losses. What's the biggest reason why I lost 15 trades? Okay, 4 trades I lost because I was counter trend trading, and 7 trades I lost because it was a Monday, for example. Okay, that's the biggest reason why I lost. How many of my winners came in the Monday? None. Okay, well, let me now do new sample size, version 2, and all I'm going to change is not trading Mondays because that, for example, was the biggest reason why I lost. And then you do it again 20 trades, compare the data. If obviously the data is worse, go back to what was working. If it's better, which it should be, and obviously, like I would always check with the third party, your mentor, to make sure you are changing the right thing. Because I've changed things before and it made it worse, and because I didn't know what I was doing, because obviously I wasn't consulting someone. But do the new trades and see if it's better. If you are spending less time on the charts, making more profit, then obviously it's better and you can stick to that rule. And that is basically the path to becoming profitable. Same approach every single time. Same approach, same approach. Get your approach validated by someone so you know you're applying it correctly. Make sure you develop your technicals, your economics for direction, right? Your psychology for your emotions. You're journaling, you're collecting data, and go through sample sizes. Take 20 trades, look at your results, go back, tweak something, do it again until you're at a point where you're happy with the win rate, you're happy with the statistics. And by the way, you can always improve. So there does come a point where like once you're baseline profitable, like let's say for example, like you're hitting like 40% win rates, you can be profitable with less than that, but like once you're like 30, 40% win rates, you're making, let's say, I don't know, you're making, it depends on your risk, but let's say you're making at least 5, 10R, 15R a month, you're good. You know, build the track record. Don't do a 20 sample size, go do a 100 sample size. Now, if you finish at 100 and you're profitable, you know the ins and outs of your system, you know your average period of drawdown, you know all your data, and at that point, you've got a track record and you're profitable. So now the challenge, the funded challenge, isn't a challenge. Now you pass naturally. Now you get payouts because you are profitable. But again, what you're doing is going straight to a live account, no experience, straight to a funded account, dick in the air, getting slapped about. No, go back to basics, go slow to go far, right? What slow will grow. Get the process, build the foundation, get everything validated, go through your sample sizes, and you will be fine. Cool. Any questions on that before we get into the outlook side of things? Yeah, 100%, bro. Um, like if you have like, for example, bad habits, right, from other strategies, for example, SMC, I want you to realize that every strategy is all built off Wyckoff, right? Everything is built off Wyckoff. So in theory, everything can be perceived through the lens of Wyckoff. But just through like how you create a new habit is simple. You need a trigger and something to remind yourself. So if you have your plan written out on a screen, you're on the chart, you walk through it, you walk yourself through it. You have to remind yourself, set alerts, set triggers around your room, and you'll replace the habit. Like for example, if you want to stop, I don't know, eating junk food, right? Because you're fat, you have a habit of doing that, so you have to replace it with something else. Instead of eating junk food, go do fucking some push-ups. You know what I mean? All right, replace it. So if you're doing those old habits, just replace it, right? By doing it in a new way again and again and again and again. Yeah, all right, bro. You can see notes. That's good. What do you do for sample sizes? It really depends if I'm testing or anything, bro. But like, I think I always review my journal, but like, I don't really do quote unquote sample sizes at this stage. Um, Everything's kind of automatic, but I would say probably I go back every week, every day, every month, and I look at my data and it's just kind of compounding at this point. But I would say like maybe around 100, I'll maybe tweak something and test it. So like let's say I take 100 trades, okay. Let's say you make X percent, X win rate. Can I tweak something? And sometimes I tweak shit and it gives me a worse result. And sometimes I tweak something, it gives me a better result. So I always test things. Like I never just add something to my plan if I learn something new either. I always test it and test it. But yeah. But obviously, bro, I'm at a point where man, where I've taken, I can't even tell you how many trades I've taken. And you don't want to do what I do now. That's the thing, right? You want to do what I was doing when I'm at your stage. So don't never if you're seeing a fucking massive bodybuilder, right? You don't do what the geezer's doing now. You do what he was doing at the start. And that's where a lot of people are going wrong. Because a lot of people they're opening the book on chapter 12. No, you got to start on chapter one. You got to go through what I was doing in day one, two, three, four. You see what I'm saying? Not what I'm doing now. Because again, where I am now is completely different to where you are now. So if you're trying to catch up with me, it's like running a race. If you're running next to Usain Bolt and you've never ran before, you can't do that. You got to learn what he was doing day one. You see? Replay? No, that is using the replay feature is probably one of the worst things you can do in my opinion. Because it doesn't like doing this, like for example, replaying and pretending like I mean this is a little I didn't take this, but I was showing someone earlier, but doing like a replay and doing this, oh, should I take this trade? That is the worst thing you can do because you're not simulating real emotions. You're not simulating the real time that's occurring, and you're going to create a lot of bad habits. Um, what you want to do is trade the real markets like they're real markets, and backtest end of day, end of week to see your plan present itself. Because all you got to do is train your eye to valid setups and take them. Yeah, like don't do the replay. I'm not a fan of that, to be honest. Um, because for me, again, it doesn't like simulate the real. Oops, it doesn't simulate the real market and the real time waiting. You know? Yeah, I mean, test on a smaller account and see, or like, a bit. I mean, you can test on another demo if you want. Again, it all depends on your stage. I don't really use them anymore, but yeah, you can test on a demo account if you want for sure. Obviously, have a separate account and see the data. Cool. All right, we're going to end this recording here and we're going to get into the Outlook.